what do you see tends to break when this trend starts to happen and the team is not ready to support, let's say 2 times, 3 times, 4 times, 10 times the volume that they were used to?
There's a couple things. You've got to be evaluating your workflow, like I discussed earlier, every day. Like every day you have to be evaluating your workflow, where's stuff going, who's overwhelmed, who's not, and really try to refine that. If it gets to a point where there's so much growth with the broker here.
Yeah, I've seen technology works, improve, but right now, where do you feel current, let's say, tech stacks or tools that you have seen fall short in actually supporting those brokers and underwriting to their day-to-day jobs?
A lot of it's the speed of transactions, and we need to improve on that continuously. And I think they're cognizant of it here at Amwins. And if that's an AI thing, we work on accounts, from $1 million in premium down to a couple grand. So the small accounts, they need to be looked at. They need to be evaluated.
If you were advising, let's say, a person that's launching an MGA, a new broker, and they were asking you about the tech that they would require, how to set it up properly, what would your advice be?
Listen to advice and take guidance from the users. And that's something we've done really well as an organization with the building of our online platform for quoting.
Hello, everybody. Welcome to Inside Delegated Authority. Today's guest is Jordan Kurkowski, EVP and Branch Leader at Amwins, where he focuses on professional lines and works closely with agency and brokerage partners to navigate one of the most complex and evolving areas in insurance. Jordan brings a unique perspective, having worked across the brokerage, agency, and carrier sides, underwriting and placing everything from D&O and EPL to cyber and E&O, which gives him a well-rounded view of how deals actually get done in the real world. In this episode, we're going to dive into how professional liability market is shifting, where brokers and MGAs see the most friction in underwriting and placement, and what it really takes to deliver both strong coverage and operational efficiency in a space where details matter and speed is becoming just as critical as accuracy. Welcome to the show, Jordan.
Thank you for having me. It's a privilege, and I look forward to our conversation.
Amazing, Jordan. Something that I have top of mind is you have been in professional lines and you have seen that you're dealing with a lot of moving parts. When a submission hits your desk, what tells you right away this is going to be a smooth deal versus something that's going to be really complicated?
Well, in wholesale, most things are complicated. So we start there, but it's underwriting review. I put my underwriting hat on. Everything from loss runs to the financial stability of the company. If you're looking at cyber, it's controls. If you're looking at D&O, it may be changes in the board. D&O can be project specific, or you're really looking at their mix of clients, what they're doing, what their claim history has been. But it's really pre-underwriting the risk, making sure we're aligning with our partner markets and getting it to the right place so we can provide the best outcome for the client. But again, it depends on the line, it depends on the details. But I would say number one's losses, number two's any other things that come in from issues with controls and financials.
Yeah, those are very good points. And sometimes we are trained on this ideal submission. What does a high quality submission actually look like in the real world, and how rare is that in practice?
It's in professional, it's a little different, right? If you get into property and casualty, those agents are working on those lines more frequently. So when you're looking at professional, there's always a little bit more guidance we give. But an ideal submission on the D&O side, really a detailed app, financials, loss runs, any notes on where the company was and where the company's going. Also with targets and premium and targets in retentions and limits, so we can make sure we're quoting at apples to apples, and potentially improve the coverage. Our goal here is to really look at risks to improve coverage and improve rate. If you're looking at other lines in cyber liability, if it's a smaller account, it can be, it's really easy to kind of flow through that. If they get more detail, we're going to have supplementals. We need ransomware supplementals. Claims information is always helpful, but the more detail in our space, the better. But again, our retailers don't touch our stuff every day. So we do a lot of training in that space and education, and we can help fill in the dots to make sure we get the best outcome for the partner agency and their client.
Yeah, I would say that's the ideal world, that everything runs smoothly from the broker to the MGA to the carrier. Where do you see the biggest breakdown today between these three, let's say, companies that are in the value chain and when it comes to deal efficiency?
Like anything else in life, it's communication, right? Like people are moving 5,000 miles per hour, and it's communication. And sometimes it's picking up the phone and having a conversation. The underwriting has become so much more automated, where a lot is email exchanged, and you can miss a lot of details in email exchanges. It's always better to pick up the phone. With underwriting specifically, we really like to, when we're working with our carriers, make sure we not only understand their appetite, but where they think their form's strongest and where they're winning. We want to help them win and make sure if we have deals that they're going to be really competitive on, we can swing them that way. But like anything else, again, it's communication, picking up the phone, realizing that it's not just an email address, it's another human on the other line, and working and being empathetic in certain positions. And sometimes you got to press too in my world. But again, it really is communication breakdowns that we need to work on and continue to grow and, to make everything as seamless as humanly possible.
Yeah, I feel that with automation, new tools, it tends to become a little bit unpersonal when, I don't know, it takes you 10 emails versus a 30-second phone call to actually solve something and shorten, let's say, the time window or sales cycle. And especially in underwriting, what do you feel is true risk analysis versus chasing down missing information or unclear information?
Well, you just hit on it. First and foremost, this is a relationship business, and it always has been. That's why I love it. You get these relationships with underwriters and retailers that are years and years, and you hear how their kids grow up. You hear about their vacations, and you build deep and lasting relationships. That's a big thing in our industry, and that goes to the underwriting side. Understanding where they are as far as authority, the experience. Where they need guidance. And that's a relationship play. But the biggest real issue there it's automated. From my time, even 10 or 15 years ago when I started at Chubb, we had handbooks on how to underwrite and guidance on how to price. That takes a little bit of the underwriting magic away. That gut feeling you have when you're underwriting a file, looking through financials. Um, you get the authority message every once in a while where they are checking boxes, and it's not on the underwriters, it's the company, and they're trying to be compliant, and they're trying to watch their bottom line. But the art of underwriting, it's an with these automation tools, the art of underwriting has kind of slipped. And some of that goes back to the age gap we have in insurance, and how there's a lot of you just hasn't seen a lot of this stuff before. Movement doesn't help in underwriting. You stay at an underwriting company for a couple of years, you don't know how your book's performing. You don't really have a real deep view of how the risks your books are performing, though, a 3 to 5 to 7 year window. So that training as underwriters move frequently kind of goes away too. But it's become automated. And again, it's everybody's moving quickly. So it's become automated, and I get it. But the art of underwriting has, over the years that I've been involved, kind of diminished for sure.
Yeah, so we have a heavy relationship business. We have a fast-paced environment, and then we have a lot of deals coming in. Let's say you're working multiple deals at once. It could be with one or multiple customers, but we are in this phase that we want everything fast. What tends to slow you down the most right now?
It honestly depends on the deal, but the most it's stuff from chasing down retailers for additional information, which goes back to the point we made about a quality submission. But in professional, again, that's kind of a given. And the other thing is underwriting response time, and that comes back to communicating with the brokers on what you need and when you're looking at it and when we will get a response. That's the communication piece slows it down. It's not getting it out to the market or getting it in the right hands. It's the underwriting companies dealing with deals all over the place. And a lot of these underwriting companies not only have wholesale distribution, but retail distribution. So you can only imagine how many mouths they're feeding. But that's what slows it down. Again, it's communication. It's not picking up the phone. not filling in brokers and your partner retailers and where they're at in the process. And again, some of it's back to the inexperience. It's in the underwriting field. We knew it was coming as an industry. I've heard it from the beginning. We've got a lot of youth out there that's coming along, and that's one of the pain points of it is that they have to evolve and learn, and they are continuing to do that. But it's really that piece. It's the communication piece, and when we hear that from the agency, we can set better and more appropriate expectations for the retailer.
Yeah, and especially right now that we're in a soft market, competition is getting really high. Let's say premiums are getting not so high, tend to be lower, and we need speed. How do you balance, let's say, being fast, doing that speed at the level that the deal requires versus actually getting everything perfectly analyzed and as for all the variables, all the information so you can properly assess the risk?
Some of that's on the underwriting side, right? We're not underwriters. Our goal is to summarize it and then have them dig in. Frankly, a lot of the time it's good when I do that. Some of the time, I get too opinionated, admittedly, right? I've seen it, I've done it. I'm in Michigan. I underwrote in the Midwest for 10 years. I get the different counties, I get the different exposures. But what it really sets into is you've got to have a good workflow with your team. That's something I'm working on still in my seventh year. You've got to communicate crystal clear with your team and have expectations um, of the workflow and how we tackle all the business that's coming in. You've got to, um, even I'm 44, but even at my age, you got to continue to learn, everything from AI that can help to, really just staying on top of your desk and make sure you're managing it appropriately. But it is an everyday battle. So, the tech side helps. That helps immensely. Everything from any tool they can give us to make us more efficient and user friendly is huge, and it is the wave of the future. But it's communication in your teams, making sure workflows laid out correctly there, and really hustling every day. The thing about the insurance industry, as you know, is you're on to the next month. It's circular, the flow of renewals. So you really just got to move on what's on your desk because there's another deal coming right down the line.
Yeah, so we have a consistent inflow of deals. We put processes in place. How many times have you seen deals, let's say, lost because the process took too long or it wasn't structured properly to actually deliver for the customer's expectations?
It's normally when we're not getting the information we need to get it across the finish line, or it's delayed, or the underwriter is him and hawing till the last minute and then they get a final decline. We tell all our markets a quick no is better than a dragged out no, right? Like just tell us right off the bat instead of dragging it out because, then we're depending on you. Just shoot us down in the beginning and let us know we have to move on. A lot of it's that in this market, we've been able to stay on top of a lot of what's going on frequently, and we haven't missed deals that come in, and we're service heavy. I preach that as a leader of my team in the office here is service. It's the first thing. It's one thing you can control, and one thing you can really change your reputation in the market, and making sure you're a valued partner for your retail partners. When the market hardens, it's when it's difficult. When you get an influx, and the switch flips. I envision that happening in cyber here at some point. I think D&O is a little bit more down the road, but in the hard market, that's when you're like, okay, I'm working 30 deals right now. I need to make sure I'm organized. I'm utilizing my team to the best of their ability. I'm utilizing tools I have internally from an underwriting platform, to leaning on deep underwriting relationships to really make sure we're getting everything assessed and across the line. But again, I keep saying communication, but it breaks down. When there's a breakdown of communication, it's when the deals suffer. It really is.
Yeah, communication, I would say it's a key cornerstone that we should have in every single company. And that focus on in in fast and out fast, I would say it's crucial. But sometimes, let's say we have information that comes, emails, attachments, different formats. How does that impact your ability to move quickly?
It's it's not as big of a deal as you would think, right? It's so standardized. I hear the stories of faxes coming in still, back in the day, and somebody standing at a fax machine and putting deals through and sending them out. Um, It's more of a big deal when there's very large attachments, and we've got to put them in zip folders. We get them out in the system, and we keep getting kickbacks, and we have to send multiple emails. But the information is largely coming across as PDF Word documents. Especially in our space, property casualty, you may be getting schedules that are in huge Excel spreadsheets, and you've got to kind of dissect them. I can tell from the conversations I've had, AI has helped there. I'm really kind of summarizing what's there, cleaning it up. We utilize it every once in a while to double and triple check our work, but that's one thing that thankfully our systems are adapted to, and our processes where we can upload and get things out. But yeah, thankfully it's not 2002, and we're not faxing things anymore, because that was a time I still hear things about at the office. And oh my God, I sat by the fax machine for 3 hours sending this submission out to 10 carriers. It's like, whoa, we've evolved a bit, thankfully.
Yeah, I would say that's a pretty solid evolution, even though at some point that in the industry we're using still wet ink. But I'm glad
Yes.
we're moving forward. Something that I have in mind is that we've seen what hasn't, let's say, prevented us from moving really fast. What do you feel the best brokers or MGAs do differently when they present a risk to you?
The best brokers lean on their relationships and build deep relationships with their partners. And the best underwriting companies do it too. They have a deep understanding of what the broker's looking for from a coverage perspective, from a premium perspective. It normally involves a lot of my key underwriters I've been working with for years too. It's a deep relationship. It's phone calls, it's texting, it's getting deals done at the last minute, and people that lean into to building the relationships, understanding their client, and what motivates them, especially on the underwriting side, is going to grab our attention. On the carrier side, again, it's relationships, but it's really understanding where your competitors may be missing. If it's service, if it's speed, if it's not understanding the products, and bringing a deep understanding of the nuances of our professional world. That's what that's where we bring value. So if we're not doing that, they're going to find somebody else. So it's stuff like that. It's really understanding your clients, communicating, and hustling for them every day. Because there's somebody else that's going to come along if you're not, and making sure you're really helping them hit their goals and putting their clients in the most secure position possible.
Yeah, I would say the best way to be successful is to make people that you work with or you serve be successful, and it's gonna come back. That's, I would say, is the what we should be striving for. But what separates an MGA from your perspective that's easy to work versus one that's always creating friction in the process?
In the MGA side, there's been so many that have popped up and really started in the space, even in my 7 years of being on the brokerage side. One of the things is really clear appetite pricing, right? A lot of the MGAs do come in hot, and they want to gain market share really quickly. That's dangerous, because it's great that we wrote it this year. The next year it goes up 50%. Well, not only is it giving the MGA a bad name, it can rub off on Amwins or whoever else is working with them. That's a big deal. We want to see underwriting consistency. We want to see a vision for the future. The ones that you kind of get the sense that they're in it to grow it and sell it. Well, that's fine, and good for them. We're looking for long-term partnerships, and Amwins is unique like that. We have a 150-year vision as a company where we want to be around generations. I have a 20-year vision here in Grand Rapids where we're playing the long game. So, if that doesn't align, sometimes that causes friction. Also, the underwriting speed, right? The tools that they have to make sure that underwriters can service accounts. If they don't have the right technology or tools, you can tell by their service, or even getting basic endorsements done. So it's really service and underwriting consistency would be my two answers.
Okay, yeah, those are great points, service and consistency. On the other side, we have evolution, and I would say insurance is the reflection of the economy. And sometimes you don't have all the information at your disposal, and let's say risks are evolving really quickly. Let's say cyber, let's say D&O in some aspects. How do you stay confident you're making decisions with complete and accurate information versus having to wait because there's not enough information to assess the risk, like let's say AI liability that's starting to pop more and more?
Yeah, that's honest. Honestly, in cyber, that's why the non-admitted markets have continued to have market share and be the go-tos in the space because they can move quicker as the exposure changes with updating endorsements. There's not as much red tape as larger conglomerates. They don't have to file because it's not admitted, so it takes less time. But it's really in cyber, it's a day-to-day look at who are the three markets that are addressing these exposures, where are their limits at, where is their form silent, where is their form addressing the exposure. A few of our carriers have come out and been affirmative on AI. One of our carriers is really went and built a new form with the goal of trying to literally pay nearly every claim that comes in, which is what we want in that space. We want to support the clients when they have a cyber breach. It's the worst day of their life for their business. So it's staying abreast of the forms and the exposures. And that kind of piggybacks to D&O. You're doing the same thing, but you're also reading, you got to read the articles that are out in the business on D&O and cyber. You gotta be privy really in the D&O space to what's going on in the courts, and if there's any court filings that may apply. Um, ESG has been a huge thing, and that's tough because that changes with administrations, that changes in different states, and honestly, the clients are kind of damned if they do and damned if they don't. So it's advising there, but our goal is to just make sure they're covered for anything they're doing, and advising as quickly as possible. When we do see trends at Amwins here, we address them with the best endorsements and policy verbiage we can in the industry. And we have groups that work on that along with our practice leaders. I also work to craft forms here in Grand Rapids specific to some of the clients I'm seeing. But it's staying educated and learning every day. And you have to do that in this industry. So it's learning from articles to language, to what's going on in the courts, to what's going on. When you get into EPL, it's so societally driven. So is it Me Too, Black Lives Matter? Historically, that line has just been driven by age discrimination claims. And as we've discussed in prior questions here, the issue with age discrimination is we have an aging workforce. And when you look at underwriting companies and other companies, there's a gap in experience there. When these folks retire, it leads to issues. So we just want to protect them. But it's I tell my staff here, and I keep myself accountable too. We learn every day. We got to learn every day, and we've got to continue to grow, and we've got to continue to understand the exposure.
Yeah, and the more we learn, the more we tend to have, let's say, additional deals because we're learning more, we're pushing the boundaries. But then the volume starts to increase. Then the endorsement starts to increase. More submissions, more endorsements. What do you see tends to break when this trend starts to happen and the team is not ready to support, let's say, 2 times, 3 times, 4 times, 10 times the volume that they were used to?
There's a couple things. You've got to be evaluating your workflow, like I discussed earlier, every day. Like every day you have to be evaluating your workflow, where's stuff going, who's overwhelmed, who's not, and really try to refine that. If it gets to a point where there's so much growth with the broker here, look to hire additional employees. And the good brokers have a vision of where they're going and what person they're potentially looking for next. If it's somebody that they need help with marketing, if there's somebody that they need help with processing, identifying that and potentially even having a pipeline of who they'd like to bring in. So it goes back to recruiting, and really getting a sense of where your team's at. And that's something I struggle with and try to get better with every day. But the first thing that goes is the stress level goes up, right? And then that can lead to mistakes. Thankfully, in professional, we're not as heavy on the endorsement side. Property casualty, a little different. And that runs into problems there where they have to follow up 4 or 5, 6 times, sometimes on endorsements with carriers. And that can get stressful for them. And that goes back to relationships and leaning on your partners and giving them honest feedback. But the stress level goes up. You're running to the biggest fire. You're working out of the top of your inbox. You're not looking at your task list. This is all stuff that leads to confusion and can lead to issues. So it's really important every day to have a gauge on where your team's at. Really try to dive into the workflow and see who's doing what. Again, that's something I'm still working on in my 7th year here.
Yeah, I would say it's a work that never ends because the stress is gonna be there. I read one post that says the only people that don't have stress are people that are not alive. So everybody has to deal with it. Stress goes up, pressures goes up. How do you balance, let's say, that speed, that accuracy, and governance when it's everything and anything coming at your plate?
It's that goes to training your employees, um, ethically. A huge thing we do here, and it's in my office where I drill down like ethics and how you operate is number one. We want to grow something really special here, and we have, and we're not going to cut corners. So it starts there. Thankfully, I could sing my company's praises all day, but we lose viewers here. But I would say there's a lot of internal tools and resources that everybody wants to help everybody win. And the company is aligned, and that's part of our vision here. So there are resources on the compliance side. We have legal counsel that supports, we have claims people that support, and we have ops people that support, we have tech people that support, with the goal of every one of our products getting better every day, from our online quoting platform to our internal system and everything in between. And that's a credit to everybody from DeCarlo on down here at Amwins, that we've really invested in that, and we really support each other. But if there's a crack in that, that's when people are going to start bending the rules and trying to run to get deals done instead of following any type of laws or guidance. And even the best teams have issues and make mistakes. The best thing to do there is be fully transparent about what happened and try to fix it. And that's what we do the majority of the time in brokerage every day too, is fixing issues. If it's the accounts that come in that have issues, or we're dealing with underwriting issues, or there's service issues, it's dealing with issues. And you've got to be transparent, honest, and grounded about it if you're going to get through them all and continue to grow.
Yeah, all comes back to communication, having a solid team, training in place, but also leverage technology. You have seen technology works, improve, but right now, where do you feel current, let's say, tech stacks or tools that you have seen fall short in actually supporting those brokers and underwriting to their day-to-day jobs?
A lot of it's the speed of transactions, and we need to improve on that continuously. And I think they're cognizant of it here at Amwins. And if that's an AI thing, we work on accounts, from $1 million in premium down to a couple grand. So the small accounts, they need to be looked at, they need to be evaluated, but then we need to get that quote out. We need to get on to the next one, because there's a lot of them in the pipe. And that's a space where we need to improve as an organization. And I know that that's something we're working on, is the speed to do that, the tools to do that. Our underwriting platform has helped immensely there. Our Microsoft tool that's in the background is a lot better than the tool we had in the past. AI has helped in certain aspects, especially with double checking policy analysis, looking through, giving guidance. But we're working every day to make that more seamless. And that's everything from when it comes in, when it's quoted, to when it's presented. We want our presentations to be universal and look very similar. And we're working on that daily. But technology is so important. Anything that can save you, in professional specifically, a minute a day over a year is a lot of time. And it is so transactional that it's more needed here than with property and casualty. So we dive into anything that can help, and it's very important. Every tool that we work with, we need it to perform, and we need it to help us process business and support our retail partners.
Yeah, and I would say that's the goal. If you were advising, let's say, a person that's launching an MGA, a new broker, and they were asking you about the tech that they would require, how to set it up properly, what would your advice be?
Listen to advice and take guidance from the users. And that's something we've done really well as an organization, with the building of our online platform for quoting. I've actively told our retail partners, send me the good, bad, and the ugly, man. Let me know where it's good. Let me know where it's bad. Let me know where it can be better. Open up the lines of communication to all users and take feedback and address it. That's the only way it's going to get better. Somebody sitting in a seat that's implementing these different tech tools, if you're not talking to an underwriter and you're an MGA on how the systems are going, or you're not polling your underwriters on what they've used in the past that's been good and bad, you're putting yourself at a disadvantage. That understanding from whoever your end user is of the utmost importance. And that's how you're going to have success as an MGA. Okay, my underwriters pull my underwriting leaders on what they've used that was terrible, what they've used that was good, and come to a consensus, right? And have conversations and research it before you implement any tools, and bring in those underwriters into those decisions and discussions because they're going to be the ones using it every day. And they're going to be the ones that need to lean on it to manage their desk and grow your MGA. So leaning on them, supporting them any way humanly possible.
No, amazing. Thanks for sharing that. And let's say the opposite side of that question is if someone was trying to scale professional lines, a professional lines book today, what operational mistakes should they avoid early on to actually be in a space that they could be successful?
And from my failures or perceived failures, I would tell you, I came in and I grew pretty quickly. I had the underwriting relationships. I was on the road a lot, but really understanding soup to nuts, beginning to end, how the process works. Lean in to your team, understand the systems, understand when that submission comes in, how is it handled? What's the time process there for it to go to the next step to get back to you? Communicating with your employees through that whole process and really understanding the sales process from beginning to end. There are so many folks that skip that. And then it's harder to lead a team when you don't understand the ins and outs of what they're doing every day. And it's something I've doubled down and invested in learning that the past couple of years, and it's helped immensely. But understand the workflow, understand the team members. And the other thing is invest in, especially in professional and in wholesale, invest in people, overinvest in people, find your people that you want on your team, that you can collaborate with, find people that have different strengths than yours. I always hire people that are strong in areas I'm weak in, right? To offset. If you look at a disc profile, I'm a high I. I don't need a lot of high I's around. We'd be making a vision for 50 years and not having a lot of implementation and straight transparency. So it's understanding your weaknesses as well and surrounding yourself with people that really address those weaknesses and bringing on people that have your same vision and get excited to come to work in the morning and build a book. But again, it's really building those personalities, looking at your shortcomings and understanding the whole process. That's where you can scale quicker it is really diving in there.
No, thank you very much, Jordan. I really enjoyed the conversation. Thanks, everybody. This was Inside Delegated Authority with Jordan Kurkowski. And this is Daniel, your host. See you next time. Bye.
Thanks.